Today is Friday, August 14, and Bitcoin just slipped under 62,696, even after inflation data came in better than expected. Today, we got the SEC making its biggest crypto move in years. Back to back ETFs, outflows, and a price chart that is erasing the entire week's gains. Let's get into it. With the Senate's crypto market structure bill, the Clarity Act, stalled and pushed to September 15th vote, the SEC isn't waiting around. Commissioners meet today, August 14th, to vote on publishing regulation on crypto, a roughly 400-page proposal rule that would let qualifying crypto projects raise up to 75 million without any full security regulations. And it will finally answer the industry's biggest legal question. Once a token stops being managed as an investment contract, does it stop being a security? This is SEC building permanent rules where Congress has failed to. This is the first real attempt at a durable agency level rulebook for how long crypto assets get sold and traded in the United States. Not guidance, not enforcement by lawsuit and actual proposed regulation. If adopted, it can give issuers, exchanges, and yes, Bitcoin adjacent businesses the legal clarity they have been begging for since 2021. It's also a signal that Washington's crypto policy center of gravity has shifted from a Capitol Hills to the SEC's open meetings. Bitcoin dropped 1.14% since midnight. UTC to 62,667 is lowest level since August 3, even as utilized producers price index data cool to 4.7%, coming in below expectations. That inflation cool down was enough to send the SP 500 and Nasdaq 100 higher, but crypto didn't follow. Instead, Bitcoin is getting squeezed by rising micro pressure. WTI crude oil push above 82 a barrel, and 10-year Treasury yield climbed to 4.66%, both which are pulling risk appetite away from crypto traders. Traders are watching 62,800 as a key technical support level. A break below could trigger further downside on the chart. This is the clearest sign yet that Bitcoin is decoupling from the risk on the stock rally. It usually rise alongside. When equities rally on the good data and BTC doesn't follow, it tells you that crypto specific selling pressure like those ETFs outflow is currently stronger than the macro tailwind. Data backs this up. Bitcoin futures open interest is climbing over 3% alongside negative volume delta, a sign traders are positioning for more downside. Bitcoin ETF saw 131 million in net outflows on August 13, following 61 million in outflows the day before. A combined 192 million two-day drawdown, the first consecutive lows stretch for the group since late July. According to farm-side investors and social value data, ARKB led the outflow out nearly 59 million, with Fidelity FBTC also bleeding heavily. Grayscale's mini BTC fund was one of the few bright spots with inflows. So ETF flows are the clearest red on institutional appetite. 2 straight days of net selling right as Bitcoin prices is already sliding suggests the buy the dip institutional build that's propped up BTC the most of 2026 is taking a breather. So here's where we stand today. The SEC's vote today could set the regulatory tone for the rest of the year. ETF investors are pulling back from the first time in weeks, and Bitcoin's fighting macro headwinds even when the news is good. what to watch out for next, how today's SEC's vote actually lands, and whether Bitcoin holds the 1628 support line into the weekend. I'll have the report for you tomorrow if they don't cancel the meeting. See you on the next video.